And Central Bank of Kenya Governor Dr. Patrick Njoroge has hit out at commercial banks and local forex traders for causing unnecessary panic in forex market, adding that this has been detrimental to the performance of the Kenya shilling against the US dollar. KTN's Charles Gitonga has more.
In his first ever address to the press during his 97 days tenure as the boss of the Central Bank of Kenya, Dr. Patrick Njoroge appeared prepared to give an account of what he has been doing to bring change to the institution, whose primary mandate is formulating monetary policy, promoting price stability, and issuing currency. And while he had a lot to say concerning his grand plan to upgrade the CBK to international standards, the weakening of the shilling appeared to be his more pressing issue. The shilling has depreciated by close to 15% against the US dollar this year. CBK has in the past pointed this to the strengthening of the US economy and decline of tourism and exports, but now the governor seems to have another reason for this, one that is not driven by demand and supply of dollars in the market.
Market players may act in ways that will actually lead the exchange rate to move, not because there's excess demand, but just because they're expecting it to be much higher, whatever it is.
According to Dr. Njoroge, local banks and forex traders should stop sending wrong signals to the market and act in a manner that ensures stability. Towards that end, the CBK is pursuing talks with commercial banks and forex traders and will soon enforce disciplinary measures for incompliant players.
We all appreciate that nobody, even in the context of freedom of speech and things like that, nobody has a right to shout fire in a crowded theater. So here as well, if you don't have data, then don't shout fire. If you cannot see the fire, don't shout fire.
The central bank believes that the measures deployed by the Monetary Policy Committee so far guarantee stability of the currency going forward. In July, the MPC raised the central bank rate from 10% to 11.5% and Kenya Bankers' reference rate to 9.87%. This month, they held steady due to decreased inflationary pressure from 6.6% in July to 5.8% in August.
It is clear that it's making those policies are having the intended effect.
The governor added that the institution has enough reserves to deal with oncoming shocks. The central bank currently has $6.1 billion worth of reserves, equivalent of 4 months of import cover. Secondly, CBK has arrangement with the International Monetary Fund to access up to $610 million should the current reserves get depleted. Charles Gitonga, KTN News.